All right, let's talk about Bali. We're diving deep into one of the hottest, and I mean hottest, real estate markets on the entire planet. It's a place that's not just about an amazing lifestyle, it's about some truly, truly incredible returns for investors who know what they're doing. So let's just jump right into the numbers. 12%. Just let that sink in for a second. That's the average net return for a good short-term rental villa in Bali. Now, if you're an investor sitting in Europe or North America, a number like that should immediately make your ears perk up and ask one really big question. Exactly. How is that even possible? How can you generate yields that are 4, even 5 times higher than what you'd get in a major city like Paris or London? I mean, we're talking about a $350,000 villa in Bali pulling in the same kind of cash as a $1.5 million place in the Mediterranean. It's wild. Well, the secret is this thing called the Bali arbitrage. It's a really unique glitch in the market that creates this massive opportunity. But, and you have to listen to this part, it comes with a massive catch, a really dangerous legal trap that has literally cost uninformed investors everything. And that's exactly what we're going to break down today. Okay, so let's get into it. First things first, what is this arbitrage opportunity? It actually boils down to a super simple equation. You've got relatively low property prices on one side, and on the other, you have Western level, super high nightly rental rates. I mean, just look at the difference here. It's staggering. In a big European city, you're fighting tooth and nail for a net yield of maybe, 1 or 2% after all your costs are paid? But in Bali, we're talking 8 to 12%. Some of the best properties are pushing even higher than that. This isn't just a little better. It's a completely different ballgame. It's playing in a whole different league. So you got to ask, what's fueling these insane returns? Well, it's a huge shift in who's actually going to Bali. See, the island has totally transformed. It's not just a 2-week vacation spot anymore. It's become this global hub for digital nomads, for entrepreneurs, for people who can work from anywhere. And these folks, they're not just tourists. They're basically temporary residents. They're staying for months, and they demand high-quality villas, creating this incredibly stable, high-paying rental market. Okay, and this brings us to the single biggest problem, the dark side of the dream. The allure of those big, juicy returns can make investors completely blind to Indonesia's really complex and honestly protectionist legal system. And making a mistake here is not just a little oops, it can be absolutely catastrophic. And the number one mistake, the trap that so many people fall into, is something called the nominee trap. Now, on the surface, it seems simple enough. You, the foreigner, give the money to a local Indonesian person you trust, they buy the land in their name, and you have a little side agreement that says you're actually in control. The problem? It's a blatant attempt to get around Indonesian law, which flat out says foreigners cannot own freehold land. It's totally illegal. And here is the absolute kicker. Indonesian courts are not stupid. They see these nominee deals for what they are, complete shams. And they can declare them void ab initio. That's a fancy Latin term that basically means void from the very beginning. In the eyes of the law, your agreement never even existed. And listen, this isn't just some theory, it's real. There was a huge case with an investor named David John Locke, where the court did exactly that. And he lost his entire investment. Poof, gone. Okay, so that's the scary part. But for every trap, there's always a key. If that nominee idea is a legal minefield, how do you invest the right way, the safe way? Well, the answer is something called a PTPMA. This is how you build a legal fortress around your investment. This right here is the biggest mental shift you have to make as an investor in Bali. You are not buying a house. Let me repeat that. You are not buying a house. You are investing in a company. The solution is to create a special Indonesian company called a PTPMA. It's a foreign investment company, and that company can legally hold the rights to the land. And the process is actually pretty clear-cut. First, you set up your company, your PTPMA, which you can own 100%. Second, you deposit the required capital, which is around 160,000 US dollars. Now, that's not a fee. That's your money going into your company to be used for your investment. Third, your company then gets a special title called an HGB, or right to build. And that HGB title gives you secure control for up to 80 years. See how clean that is? The company owns the asset and you own the company. It's simple, it's legal, and it's secure. All right, so we have the how completely locked down. Now let's talk about the fun part, the where. Because in Bali, the difference of just a few kilometers can be the difference between a cash printing machine and a property that just struggles.
So let's break down the main hotspots. First up, you've got Canggu. This is the island's engine room, just nonstop action. It's an absolute cash cow with insane demand. But it's getting really crowded. Right next door, you've got Perenninan. Think of it as Canggu's more sophisticated, cooler older sibling. It's a great mix of strong rental income right now and good potential for future growth. And then, way down south, you have Uluwatu. This is the luxury frontier. It's all about capital growth here, driven by these huge, stunning villas with insane cliffront views.
Okay, and for our last section, let's bring this all back down to earth. Because that impressive 12 to 16% number we talked about, that's the gross yield. That's the shiny number at the top. To really understand what you're going to make, you have to look at the costs. Think of your gross revenue like a big pizza. Before you even get a slice, a bunch of people take their piece first. Right off the top, boom, 15 to 20% goes to platforms like Airbnb. Then your property manager takes another 15 to 20%. And then you have all the other operating expenses, OPEX, like maintenance, utilities, all that stuff. And what's left over? That little slice at the end? That is your actual net return. And yet, these are the costs that often catch people by surprise. Management and platform fees combined can eat up almost 40% of your income. Staff, pool guy, electricity, that can easily be over $1,000 a month. You've also got something called bunjar, which are fees to the local community. These are not optional, they're essential. And because it's the tropics, you absolutely need a maintenance fund of 3 to 5% of your revenue, because things just break. And of course, you've got taxes, a 12% VAT coming in 2025, and a 22% corporate tax on your profits. And there's one last critical concept you have to get your head around: lease, hold, decay. Remember, you're not buying the land forever, you're leasing it for a set period. That means your asset has an expiration date. The best analogy is a melting ice cube. A 30-year lease is a big ice cube, but every single day it gets a little bit smaller. Its value is constantly decaying. And this is so important for your exit strategy. I mean, selling a villa with 25 years left on the lease, that's one thing. Trying to sell it with only 10 years left, that is a much, much tougher sale. So there you have it. At the end of the day, the opportunity for these incredible returns in Bali is 100% real. It's backed by powerful economic trends, but it is not a passive investment. It's not a get-rich-quick scheme. It demands serious homework, a bulletproof legal setup, and a very realistic view of the actual costs. Which really leaves us with just one final question for you to answer. Is that incredible reward really worth all the rigor?